Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for July 6th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Obviously, over the recent week plus here, we've had a major sell-off and then a major reversal back up after Brexit. And really what we've done now is at least see some rejection above the previous week's high, and now we've seen price auction lower. What I mentioned in our trading room yesterday was that after such a significant sell-off and then a significant bounce here, all of that volatility will likely manifest itself into a digestion in the week to come. And so despite early selling pressure here, what I'm looking for is for some sort of rejection, perhaps around 2060, where we see a return back up within the range as price looks to trade in this range over the next week or so. Once we're done with that range, we'll likely see price test the edge of the current expanding range. So that's something to keep in mind. We continue to have an expanding range here that's developed recently. Upper boundary here, lower boundary like this. And this is very important because now we have something to look for. We know that 2120 is going to be very important, and any push above that zone into 2140 could be an easy trap for a sell opportunity back into the next LVM below, which is going to be 1955. So that's going to be the next play that I'm watching. But right here in the middle, around composite VPOC, there's not a lot of edge. So you have to be very careful and cautious with how you enter the market at these levels. Now here's the ES in the intraday time frame. Let's go to a 512 tick, and let's bring up the PivotBoss intraday template here. For the most part, what we see is price trading in a range. We have 2084.5, which is the previous week's close price, actually the previous session's close price, and so far that's been offered once and offered twice. So that area is offered right now is 2084.5. We also have a zone down here, 2067s, that's bid, and the recent rejection here on failed new lows implies that we could see a reversal back up in the range. First VWAP at 74, the overnight pivot range here at 77, and then 84.5 could be the next zone up. So that's what I'll be looking for here, is any signs of a continuation back toward these highs. Should price get back toward these highs, look for bears to continue to defend it. One thing, failure to hold 67s opens up a move back toward that 2060 we mentioned earlier, and 56. Now taking a look here at crude oil. Let's look at crude. Let's not delete anything. And let's bring up the PivotBoss style here. Here's crude oil. What we looked for yesterday in the trading room and came to fruition perfectly is we were looking for a major sell-off due to the stops being run here. So once price got below 48s and the stops were starting to be run below the 3-day lows, the implication was that price was going to see a continuation until the midpoint of the day aligns itself near where the stops are coming out. So we knew there was going to be a big time push downward. Additionally, we had a major target zone down below at 45.83 to 45.94. 94 being the most significant key level, 94 to 91 being the most significant key level. So a nice confluence there. So we were looking for a continuation in that zone. But once we got here, what we're looking for is for a trap to occur, perhaps at 91 or below it, for a shot at seeing a reversal back toward 48.79. So right now we're at the lower end of this key range here, and any rejection off these lower levels would imply a return back up within the range, as has been the case over the last rotations off the zone the last two times. So that's something to keep in mind. That 45.91 is very important. If we look at this in an intraday time frame here, and again change the style, here we go. Here's the 45.91 right there. That's that golden line. And in addition to it is going to be this one right here. That's the 45.94 level. That is the primary bear target for the week based off the PivotBoss ADR method. So from this high of the week, that is actually the 100% weekly target. So that's the average range target over the last 10 weeks. And it reached it perfectly. And that's why we're looking for that zone. But now that we're here, this is an area that bulls want to keep bid or look to trap below it, because we have that key level. So that's a 45.91. If price pushes down below it and forms some sort of box and can't get paid, that could be a significant squeeze opportunity back up. Breaking back below 45.90 and failing to get back above it would be very, very significant. All right, let's take a look now at gold futures. Here's a look at gold. Gold has been significant with the way that it rallied here recently, pushing through the 1307s and then coming back to it and finding support, and then another massive squeeze. One thing we were looking for was 1340, which is this level right here, down to 1310 as being the major zone to watch for a breakout. We thought that bears were defending for a likely return back to value. That didn't play out. After 3 days, usually what you want to see is absorption occur 1, 2, or 3 days. You get past 3 days and now all of a sudden the control starts to shift. They're unable to absorb and get this party started to the downside, and now you see the stops come out. So 1340 was very important. Upon breaking through 1340 here, the retest at that level was defended very nicely, and then we've seen a new squeeze to new highs beyond 1362. So this is very, very important. That 1306 level is very, very important. It's the midpoint of the current key range that just developed, and it's also the top of the previous key range. So 1306, 1307, very important. Major LVN in the profile as well. That's a significant level. So should price return back to that zone, expect bulls to continue to defend it on rotations until proven otherwise. For today's market, 1362 is the key level. If price trades well above this level and then closes back below it, that's going to be significant, and the likely implication is a move back to the opposite side of the current micro composite profile, which is 1306, 1307. So that's something to watch out for today. If we take a look at the intraday time frame now and go down to PivotBoss Intraday, here we are. You can see an uptrending market here with VWAP, and it's been trading off the third standard deviation of VWAP, back to value, back to value. So right now we are at value in an uptrending market, also at the overnight pivot range. And this is a zone that should be bid. Bulls want to defend and squeeze to 77.5. Failure to hold 69s would open up a move into 1364s, which is S3 and the LVN. Again, any pullback could be a short-term buying opportunity back up to value. All right, let's take a look lastly at the NQ now. Here's the NQ. We can bring this up to a higher time frame chart. The NQ has been significant in that it broke through the bottom of its key range here, right there, traded down below it very, very nicely into 4160s, and then boom, big time rally back up, but did not push to new highs. It continues to have a downward slope to it. So if you bring this out a little bit here, there's almost a downward channel that's starting to play out here. For the most part, this is very similar. Our analysis is similar to the ES, which is that we had a major sell-off, then a major reversal. After all of that volatility, you're likely going to see trading range behavior. So somewhere between the 43.28s and 44.60, that's a zone here where we're likely trading. If you look to the left, ahead of Brexit, we had a trading range from 44.40 to about 43.40. That was the range ahead of the news. Once the news came out, now we're back into that range. So basically 43.40 to 44.50 or something like that is the zone to watch as a trading range. Once the market finds its low here this week, we could go right back up toward the high heading into the end of the week. So something to keep in mind. Now if we take a look at the intraday time frame and come down a little bit here, one thing you'll see is another trading range has developed, very similar to how the ES has formed. The previous session's closed, 44.07. Right here, rejected twice, down, boom. Now you've gotten bulls that come in off the lows, attempting to defend between 43.65 and 43.70 for a shot back to value, and then back across the range. So that's something to keep in mind, is that this is lining up very nicely like the ES. A very tightly coiled range here. Again, rejections on lows here would suggest a move back across the range. This area has been offered, so keep 44.07 to 44.10 offered. Any failure to hold above 43.65 opens up a move into 43.49 and 43.40. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.